Catherine Bennett joins me now from our business desk because the coronavirus pandemic has plunged Australia into its first recession in 3 decades. Catherine, what's the situation then for the country's economy?
Well, the economy is set to shrink at its fastest pace in history during the second quarter of this year. And the country now has its biggest budget deficit since the Second World War. It currently stands at 86 billion Australian dollars, that's 53 billion euros. And that is set to expand to 185 billion Australian dollars in the first half of the year. That's almost a tenth of GDP. Now, this budget deficit is primarily due to massive stimulus spending. The government put forward 289 billion Australian dollars in economic stimulus to support businesses and workers from the worst of the fallout. The country's treasurer, Josh Frydenberg, said that these harsh numbers reflected a harsh reality for the country and that the economic outlook for Australia remains uncertain for the rest of this year. Now, Australia has actually managed to contain the virus much better than other developed nations. But because it's so reliant on trade, it hasn't been able to entirely cushion its economy from the impact, of course. And we can see a similar story with South Korea as well, which has now fallen into recession after reporting its worst economic decline in more than 2 decades. So like Japan, Thailand and Singapore before it, South Korea is in a technical recession, and that means 2 consecutive quarters of decline. Exports account for nearly 40% of GDP in South Korea. And like other countries in the region, in that Asian region, it's the way that these exports were impacted during lockdown that has dragged down the economy there.
All right, let's move on to the electric car company Tesla, which recently published surprising financial results. So what's been the impact of the pandemic on the car maker?
Well, Tesla actually seems to be one of the only automobile companies that has managed to sort of glide past the impact of the coronavirus lockdown with little impact on its net profits. So it has just announced that it earned $104 million in the second quarter of this year. And that's despite being forced to close its only factory in the US, in California, for 7 weeks between March and May. So while, of course, that did have an effect on production, an effect on sales, the company has still, despite all that, managed to beat analysts' expectations. And its resilience is surprising, especially when you do compare it to other car companies and how they've fared during the pandemic. Now, with Tesla, the company's share price just keeps rising. It's nearly quadrupled since the beginning of the year, from $430 to more than $1,550. And that's now made it the world's most valuable car company. It's beaten Toyota, knocked it out of the top spot, even though Toyota actually sold 30 times as many cars as Tesla did last year. So this is why many analysts say that Tesla is actually overvalued. They say it's hard to justify such a high stock price for the company, and that they say that investors are actually making the mistake of putting it in the same category as big Silicon Valley tech giants like Apple, Google and Facebook. They say that investors are forgetting that it remains a car company, which comes along with all of those natural risks that car companies have, which are an entirely different set of risks from those that would have a tech company.